What's up guys, welcome back to Joevestor Trades. My name is Joseph, and in today's video I'm going to be showing you how to double your money using the call debit spread strategy. This strategy is very good for small accounts looking to grow pretty fast, so I'm going to show you guys today in this video. If you go on to enjoy, make sure to give it a thumbs up and subscribe for more trading content like this. Also, if you want to be a part of a free trading community where we can talk about any of the stocks you're interested in buying or even hopping into some of my plays, make sure to check out the Discord channel in the description down below. Alrighty guys, now that we have Robinhood pulled up on my screen, I'm going to first show you guys how to set up a call debit spread and what it is. So a call debit spread is just like buying a regular call, but you decrease your risk and also the cost of entry. As we can see, I have Peloton pulled up here, and if I wanted to buy a regular Peloton call right around the money, it would cost me about $200. Well, if I'm bullish on Peloton for this week, I can simply just buy a call debit spread, and not only does it decrease my cost of entry, but it also minimizes my risk. So in order to set that up, all you have to do is buy a call, and then you can simply sell the one right above it, and that creates a call debit spread right there. If it says something else, then you've selected something wrong. So make sure it says call debit spread on your screen. And as you can see, our max cost for this spread is $47. So now instead of paying around $200, we're only paying $47 for a call on Peloton. But because our cost of entry is now lowered, our max profit is not unlimited. Our max profit is capped. Whenever you're buying a regular call, the max money you can make is pretty much unlimited depending on how far the stock runs up. So with this call debit spread, I'm pretty much saying that I think Peloton is going to close above 104 and 105 on expiration, which is April 30th. So if Peloton closes above 105, I make my max profit, which is $53. So I'm risking $47 to make $53. This is obviously over 100% return on your money. And you don't only have to buy one, you can buy 10 of these contracts, not 101. You can buy 10 of these contracts if you want. So now, we have $470 to make $530. So with small accounts, this strategy is very good because let's say you only have $500 and you believe Peloton is going to close above 105 on expiration. You've invested $470 of your own and now gotten out $1,000 because you made max profit. Now, if Peloton closes anywhere in between your two strikes, let's say Peloton closes at 104.50, then as you can see, that's right around our break-even point and we lose no money. Now, if Peloton closes underneath 104, that's where we get our max loss of $47, which is what we paid for the spread. And now I'll show you guys an example of a play that I took on NEO using a call debit spread. Right here I have my NEO history pulled up, and I bought a call debit spread on April 19th for $46 on NEO. And as you can see, I bought the 36 call and then sold the 37 call, which is right above. And I closed that spread today for $91. So this is a great strategy. As I said before, you can buy as many contracts as you want of this spread. It's a very great way to grow a small account. You could also even do spreads that are in the money, but because the likelihood of the stock closing above that strike is higher, then your reward is lowered. And I'll show you guys an example of that right now. If I think Peloton is going to close above $102 this week, I can buy the 101 and sell the 102. And as you can see, now our cost for the spread is $63 and our max profit is $37. So this is about a 60% return on your investment if you were to do this spread right here. As you can see, Peloton is already above 102. And another thing that is great about these call debit spreads, theta works in your favor. As time goes on and Peloton stays above your strikes, then your spread will be worth more and more, closer to your max profit. So it all depends on where you pick your two strikes. I typically go right out of the money if I'm bullish on the stock for that week, and if it does close above my 2 strikes, then I make max profit. This one right here is actually a great play to hop in right now. As you can see, Peloton right now is right around their support levels where they typically bounce from, and the likelihood of Peloton closing above 105 on Friday is very likely because the MACD, as we can see, is starting to curl up, and Peloton has bounced from these levels multiple times in the past. So if you wanted to hop into this spread right here, you could, and you would make over 100% on your money. Another great example of call debit spreads are if you want to buy calls for bigger companies like Tesla or Amazon. They have high premiums, and using the call debit spread strategy still lets you be bullish on a company. So right here we have Tesla. As we can see, any of the calls around the money is about $3,000. And if we were buying simply a naked call, then as we can see, we would have to pay $3,695. But if you don't have that amount, then you could sell a call right above it, or even you could pick a strike even further out. But if we sell the call right above it, as we can see, our max cost now to be bullish on Tesla is only $120. Our max profit is $130, so we make back our investment if Tesla closes above 722.5 on April 30th. So this is a great way to play companies that you can't afford to buy regular calls on. As I said before, it decreases your cost of entry and decreases your risk as well. And going back to Peloton, another thing I wanted to show you guys is for max profit, in order to calculate that, all you have to do is subtract the call that you're selling from the one that you're buying. As we can see, 105 minus 104 is $1, times 100 gives you $100. That spread is $100 minus our cost of 47 gives us our max profit of 53. So you can do that with whatever 2 strikes that you pick. If you pick, let's say 2 strikes above, same thing. That's 200 minus 83 gives you your max profit of 117. So that's how you calculate what your max profit would be if the stock closed above that strike. And also, as I said before, Robinhood does a great example of showing what your break-even price is on Peloton where it closes, as well as what you would make if it falls in between. Let me know what you guys think about this call debit spread strategy and whether or not you'll be implementing it into your trading as well. If you learned anything from this video, make sure to subscribe and turn on post notifications so you don't miss when I upload. See you in the next one.